can't hear me, just let me know, please. Okay? Anytime on the call that you guys can't hear me very well, please, someone should let me know on the chat so I'll know. Okay? Okay, so we are about to get started, and a lot of people will miss this call because I had to shift the time, and it might be very late for them. Not might, definitely very late. But the meeting is today, it has to be today. We have to proceed even if it's just 2 people down the webinar. So that's what's up. So right now, I believe you guys have written down a lot of questions, and you guys are just got started, This call is for those guys that have gone through basics. So basically what we're going to be doing is forex basic, not really advanced, where we get to analyze the chart and know when to execute a trade. So I'll be looking at the chart, boss, and I believe your questions are already set and ready. So who is going to be the first person? So today's call is just for questions and answer, You guys get to ask questions and I get to answer. So I believe you guys have written down questions that you've been waiting to ask on the call. So if you have done that, what effects ones, yeah? And so I'll explain everything in details. So the first question we get from iPhone is say, Naked, please, can you shed more light on engulfing candles? All right, that's a basic question, and that's exactly what we are doing on this course. So let me share my screen with you guys if you can see. Let me know if you can see my screen. Let me know in the chat if you can see my screen. So I'll explain that. I can see perfect. All right, that's great. So engulfing candle, our candlestick formation, and these are used for entries in NF9. So we use candlestick as our last confirmation, especially for myself. Whenever I want to enter a trade, I look for 2 types of candlestick formation. Either price creates an engulfing or it creates a pin bar. I believe you guys must have heard about pin bars. So that's like mostly what I look for my last confirmation to execute my trade using my own strategy. You understand? So we have a lot of candlestick patterns, formation that you guys have read. So it doesn't mean you have to be using everything. You need to pick the ones you like, that these are the ones I want to be looking for in the market, and those are the ones you want to stick to. Okay? So I'm just saying that by the way. So an engulfing candle, we have 2 types, which is the bullish engulfing and the bearish engulfing. It shows when price is being overtaken. Like, let's say for an example, the pressure in the market is switching for a buy to sell. These are like things we get to know when we see price in our zone. So we use them for entries, looking out for them. For an example, price is moving in an uptrend now. And all of a sudden, you see we have a candle right here. That's a bullish candle. All of this, inside all of this, we have bullish, bearish, but I want to emphasize on this. So this particular candle is a bullish candle. Why is it a bullish candle? Because the market is still going up. And you can see we have, for example, we say that is our zone. This white line here is our zone where we are looking to sell. Okay? So I'm going to change that candle color to red so you guys understand. So red is for sell and, blue is for buy. So it's red now. Let me look at the chart real quick. All right, perfect. So it's red now, and let's put it green since it's a buy candle. Okay, I think it's better. We use green and red. So green is buy, red is sell. So you have a candlestick like this, signifying this trend is still going up, and all of a sudden, let me accept these people. All of a sudden, you have another candlestick formation like this. Boom. So I'm going to tell you guys that is how a bearish engulfing looks like, vice versa when we are saying bullish engulfing. Now, I want you guys to pay attention to something. You see why it's called bearish engulfing? It shows that the pressure is now coming for sellers. Sellers are now coming in. It's engulfed the previous candle. You can see how it covers the whole body of this previous candle. So sometimes candles might have wick. So personally, when I'm taking my trades, I don't really think the wicks are necessary. I just want to see the open and close of the two candles. So if it can overtake like this, it's a good one for me. So some people would think like, oh, engulfing has to engulf everything, the body, the wick. Yeah, if that is the one you like to take, it's fine for you. Just like I said, that's how I use it. I remember I always say trading, you have to find out the things that you want to use, and those are the things that you want to stick to, okay? So I want you guys just to pay attention that it covers the previous candle totally. So that's a bearish engulfing, signifying that sellers are coming into the market now from that zone. So pick a sell. So mind you guys, you don't just trade this candlestick anywhere you see them in the market. Remember, it has to be in your zone. If you are using support and resistance, you know where you are looking for them. Your zone, your support and resistance line that you've drawn. If you are using like highs, lows, you want to see them at the top of a structure. Vice versa for a bullish engulfing candle. So you want to see them at the top or the bottom of a structure. You understand? If you are using 20 EMA, just like me, I love to see those rejection of my 20 EMA. So we use them on area of values, places we are looking to execute our trade on. So I hope that makes sense for the person that asked that question. If it doesn't, please let me know. I'm going in again. So we have another question. If I have a buy bias from a bigger time frame and I come to a smaller time frame, like 1 hour and 15 minutes, then I'm seeing a reversal pattern in a downside. Please, can you share more light on this? All right, that's a very good question, but that's more like advanced. But it's fine. Now, if you are looking at higher time frame, just like I said, you have to find out how this thing is going to work for you. You have your own time frame. Now you know your own time frame. Which of my time frame? Which of the time frame is my entry time frame? So the time frame you do the analysis from is different from the time frame you are looking for entry. So see now, you did your analysis on daily time frame and you are seeing a downtrend. We are selling, which means you are looking for sell. You go to 4 hours, you're seeing a downtrend. We are looking for sell. Now you go to 1 hour and then you are seeing a little uptrend. Inside of that downtrend, you have seen a little uptrend. Now you are confused because you don't know what you're trying to take. Now, there are two things involved. Personally, for me, I'll stick to the trend, which is the higher time frame trend. That's what I'm going to stick to. Listen, I want you to pay attention because this thing is what you have to figure out yourself. This is how I want to take it. Now, if you are seeing the signal on the 1 hour time frame, which is signifying a bullish trend, which means it's going against the higher time frame trend. And you know the higher time frame has the stronger trend. The higher the trend, the time frame, the stronger the trend is going to be. Okay. Now, I'm not saying this trade is going to be invalid. Some people, they like to take this particular trade, the buy setup there, but it's going to be a short-term buy, not a long-term buy. So you can imagine when you are trading all of this pullback, for an example, anything you are trading inside of this pullback is going to short. It's going to be a short-time trade because you can't compare it to the impulsive move. You can see how long it is. Okay. So I'm just saying that's just by the way though. So if you like to take setups like that, it's a valid setup, but it's not a high probability setup. That's different. You get to see some setup that you know they are valid. What would make this a high probability setup is if your higher time frame is going for a sell, your 4 hour is going for a sell, for an example, and your entry time frame might be 1 hour, and you still see and you're seeing a sell setup. Yes, you already have higher time frame backup, so it's a high probability trade setup. So this particular one, when it's going for a buy, you can confirm, yes, this is your buy signal, this is a bullish flag there. It's a valid setup, but it's not a high probability setup. So some people like taking high probability setup alone. Some people will take valid setup along the line. So this might play out and give you small pips. It might even play out and become a change of trend, which means we've broken out of this previous trend. Now we are going for it up for the buy side. So it all comes down to if you like to take them. Personally, I don't like to take them on my own. But it doesn't mean I won't take them. If I'm taking them, like sometimes I'll use a small lot size. It won't be like the same lot size I'll use on trading the trend. So I hope that makes sense to you guys, and let me know if I was able to answer that question. So how do we determine long-term sell and short-term buy? The trend, bros. it's the time frame you're analyzing on, okay? Where's your daily support? And if you see price at daily resistance, then you know your daily support is going to be far. Hope that makes sense. So we use the time frame to do that. You can see a setup of 15 minutes time frame. Okay. I can see you guys have gone far. Yes, I can see. So the next question is, if I have okay, I've answered that one. If I have a buyer, I've answered that one. How do we determine? Yeah, boss, I can't hear your voice. I believe it's from your side, not here. You have to join using internet audio. Maybe somebody will teach that person how to join on the chat because the person will be able to hear me. How to draw resistance and flow. I also don't know how to use trend line. So this is it. When you see price, the best way to draw is what and resistance. This is an uptrend. You know, we have series of higher highs and higher lows in an uptrend. Okay. Now, if you want to draw your support and resistance line, yes, you are using, look where price have rejected before. You are looking for areas like, it's usually zone though. Like we use zone, all of this zone, all of this zone, all of this zone. So it's not just lines. We just sometimes see lines because we already know, like, oh, these are the areas where we are looking for what we are looking for, whatever it is. Okay, so you look for areas where price was once a resistance and now a support. That's where you use boom. You see, once a resistance support, once a resistance, now a support. So you look for areas like this. Some people look for draw their support and resistance because they see price rejected here, because they see price rejected here. So price was, when you check this structure, you see that, oh, price was just a support here, support here, support here. So when they see that, oh, price is actually at that place in the future, they'll be like, oh man, it's going to bounce up from here because it has done that all of this place. Okay, so this is also a support, no doubt, but it's not a like strong support. How it's going to be? Why is it not a strong support? Because price was not once a ceiling before it became a floor, which means price didn't test that place. Like it wasn't a resistance before, you know, before it now became resistance, became support. So that those are the areas that are going to be stronger. Okay. If it was like this here, you might be expecting another buy from here because price, that's an area of value. Also, you can see it was once a resistance and now a support. So those are like how you get to know them. Trend line is very easy. You just have to identify a trend that is moving. Now you have to draw your trend line. You look for two touches, you know, to connect. When it's more than 2, 3, that means that trend, that level is very, very strong. Just like what we had here on our screen. You can see this is GDP, NZD 2 hours price broke out of a trend line. You can see how I connected this trend line, which means this is an uptrend. And you can see we had an impulsive. You see the way price broke out of, when price is breaking out of something, it usually breaks out strong. If it's breaking out very weak, man, you know it might reverse. But when you have a strong breakout like this, you know, man, that is where momentum is. These guys are ready to take this market to the downside. You see how the candles are different from all of these candles, okay? Big candles. When you see big candles, it's called momentum. That is where the market is actually moving. That's where the big players are. Okay, so I hope that makes sense. So this wasn't on my screen. I drew this last night, and it wasn't on my screen today. I don't know how. I was expecting to sell this breakers. This would have been my entry. This lovely pin bar at the top right there, which shows signs of reversal, man. Damn, I missed it. I saw it late. I swear. It's fine. Setups need to finish for market. So yes, nice. But how do we locate price reversal zone? Yeah, what I just explained just now. Okay. So it might be area of value where price was once a resistance support, or if you have a trend line and price breaks out of it, you know, we usually use patterns the way we trade too. When you see patterns, you know, then you get to know what I'm talking about. So those are reversal zones. So we use structure highs and lows, you know, using higher time frame, previous resistance, blah, blah, blah. I've been trying to figure out the momentum, but ain't getting the chart to figure it out. So I hope you guys understand now clearly. Explain the pullbacks again, please. So pullbacks are like, you know, when price is moving up impulsively, like going up, down, you know, forex market doesn't just go up, boom. Okay, this is how it moves. But wait till they happen last, you can see it's going up at the end of the day. So that's how the market moves. When you see big movement up, you know something happened, news events, blah, blah, blah. They move the market. So what I want you guys to know is that pullbacks are like this. We have the first leg. This leg is called what? It's called the impulse. So impulse, say the impulsive move, whatever it is. That's the impulsive move. And then the second one that will come back is price have to correct. Price just can't keep going up. It has to correct. Remember what I told you? This is how the forex market moves. Okay. So this is called the pullback. This particular movement right here, it's called the pullback. This drop, it's going against the trend. It's called the pullback, also known as consolidation. Some people say, oh, it's correction, you know, pullback, it's correction, also known as consolidation, you know, also known as the corrective movement as well, you know, correction. Just like I said, let me write it down. Also known as the corrective movement, you know. Let's say corrective movement, no time. And then we're going to have the continuation. And the continuation is this that will keep going with the trend. Okay. So you can take a screenshot of this for the person that asked that question. Now see guys, in an impulsive move, you get to see strong candles, big candles, fat, healthy candles. So when you see that kind of candles, that big, healthy, strong, you get to know that, oh, these candles are the impulsive candles. That's the impulsive phase. But in the correction, you get to see candles are getting smaller and we will be going against the trend. If an uptrend, will be pulling back. Candles will be getting smaller. You get to see rejection, small candles, you know, compared to the big candles. So that's how you get to know correction most time. And then boom, impulse again. You feel me? So back to questions. Please send okay, please shed more light on pin bar and head and shoulder. Okay, pin bar. We had a perfect one here. Boom. It's one of the reversal candles that I used. I told you guys earlier on. This is it right here. Look for it at zone. When you see it at your zone area of value point of where you want to execute your trade, and you know you have to take them. And looking at higher time frame, daily time frame, you can see we are actually at a structure high right there. You can see from your left, boom. So that's a structure high for me where we've seen price rejected before. Price came there again today. So those areas are where I'll be looking for that, and it's happening right here on my time frame 2 hours. Well, I didn't have this chart on my screen. I just included it like now. That's why I missed that movement. 155 pips movement just today. That would have been mad, and that would definitely make my week. In terms of head and shoulder, just like the one we had, those are under patterns. When you get to advance, you see them under patterns that would trade just like head, you know, left shoulder, head, and then right. You know, it's just this pattern price creates, you know, just to drop. We had the left rejection, this one that is going to be higher than this, and then completion of this, and we get to see price drop. Okay. Let me see. The basic says that it is good to trade when to market open. Okay, it's good to trade when the market open at the same time. Explain. The basic says that it is good to trade when to market open at the same time. Yeah, the best time to trade, man. It's when we call the overlap in the market. That's when we get to see volatility in market. When two trading sections jump together, we call it overlap. So we have the London and New York overlap, which is the best for me, and that's within, like, let's say 12 p.m. Nigeria time, 1 p.m., 2 p.m., 3 p.m. Nigeria time. Those are like the best time to trade, because that's when we get to see momentum. We have like high impact news release at those time, you know, and the New York market get to open, you know. USD is the biggest currency in the forex market, so that's when we get to trade, you know. And then we have the Asian overlap as well, which happens in the night, but you know, not too much volatilities at night in the forex market. Please shed more light on the ways. Okay. This one said, in a corrective movement, is it possible an engulfing bear bull candle can appear and the corrective trend still continue? Yeah, anything is possible in the forex market. Yeah, yes, definitely. So you take trends. If you are looking for pin bars, like pin bars had the hammer, then the shooting star is for sell. Pin bars are for the buy. So shooting star is for sell. So it's best you are looking for a pin bar in a bullish market, not in a bearish market. You're going to sell territory and you. So left for me, I ignore every pin bar in a bearish market and focus on the bullish ones that are in my zone, you know. So you dig. GDP NZD, after missing that entry, what do we need to confirm a second entry? And that's a good question. Personally, for me, I'll wait for a correction because that's an impulsive move right there. You can see that's an impulsive move. We broke out of an ascending channel, which is a reversal pattern. And then this is an impulsive one. So I'll wait for a correction to continue to sell. So that's what I wait for. So anytime you miss the risk entry, wait for a reduced risk entry. And this one you see right here might impulse back up, correct, then go up. So you're waiting for correction to confirm it's actually a correction. If there's no correction, it is not a correction. So that's a good question, by the way. Boss, I don't know how to use TradingView. And there's video on the Telegram on how to use TradingView. Go check it out. Double tops zone, double tap zones. Yeah, double tops. You know. Did you see 12 p.m. to 2 p.m. this time? Yeah, 12 p.m. to like all those, you know, we are using the London timer, so market usually closes by 11. So let's say 12 to 4, you know, within those time period, 12 to 3, basically, those are the time I look for entries if I didn't get an entry during London section. So during New York section, I look for entry at those times. So please, how do you know which double tops bottom to take when you see around 3 potentials double top together in I wish I understand that question. I didn't get that question. I mean, double tops are two rejections now. So there's no way in the market you can see 3 or more than that's triple top. Got this one privately. It said the sell down, stop up, and buy up. Down, I don't understand it. Just sell down, I don't understand. In forex, you want to sell high and buy low. So sell down, stop up. I didn't get that. Maybe I didn't say anything like that. How do you know that a corrective phase is over and the market is ready to move? So that's a good question. Personally, for me, I use what we call the 20 EMA. And when you guys get to advanced stage, you get to know how we use 20 EMA to pick up entries. But I'm going to show you guys a couple of examples right here on the screen. So I'm sharing my screen now, if you can see. So personally, for me, I utilize this a lot. It's called the 20 EMA, and I don't really use it on this pair because, you know, I have my pairs. I use it on GDP, USD, Euro USD, and then USD JP. No, not really much. USD JPY, USD CHF, and, you know, Euro CHF, and some other pairs as well. So just like this example now, as you can see, I love this one because it has a lot of example in it. Now, this is an impulsive phase we had right here. And obviously, as you can see, looking at this candle, struck push to the downside. We broke this low at the left-hand side. So that's an impulsive leg. Now, after that, what are we expecting? Get rid of this 20 EMA now. We're expecting a flag or a continuation to the downside. Now, I want you guys to pay attention to something. Price starts to correct, as you can see right here. Blah, blah, blah. This is a flag. But, you know, there's more to trading than just looking at something move sideways and say it's a flag. So you guys will learn this in the advanced class. We have something we call two-touch rejection to confirm is a flag, which means price has to reject 2 times if it's a bearish flag, you know, to confirm rejection. Now we had the first one right here. We've seen price rejected right here. Boom. That was where the correction started from. Now we need price to go and then come back and then take off from there. So you can see what we had right here. Price rejected, exactly created a high right here. And then boom, came down for the second touch. Once we have that second touch, that's when we get to set our order below, because we know that, oh, this is actually a flag, and any moment from now we're getting a breakout, blah blah blah. So this is it right here, completion of flag at the top right there. Another rejection, we broke out previous high, came down impulsively. Now you see how the candles are different. We set our order below and we got triggered in, and you see that trade from entry to the downside, see over 200 pips. So that's how it works. Well, anything other than that, I utilize the 20 EMA as well. I need the rejection of the 20 EMA. And just like you can see right here, the rejection I got of the 20 EMA, there's something we have to clear previous high as well. We cleared this high. And this is going to be my entry if I'm taking that trade, because it's an engulfing candle, okay? And I remember I told you guys I look for engulfings and pin bars around my zones, okay? So I don't really trade it on this pair, but any other pair, Euro USD, GU, I use 20 MA not. You dig? So just like this is a 20 MA. There was nice one at after an impulse. There was nice one at Euro GDP earlier this week. Nice, lovely rejection came back in 20 MA pin bars and blah, blah. Well, I've said too much on that. On to the next one. How do you know the buy or sell correction? So I'm sharing again and again and again. Okay. When we are buying, we're anticipating the market to move impulsively. So you can see how the market came impulsively, and you can see some move that went against the move. That's the correction. Drop down impulsively, look at some correction, smaller can drop down impulsively, see the big move. This is the correction right here. And then we had this impulse, before we start to see reversal, correction, impulse, blah, blah, blah. So I hope that makes sense. Impulse goes, bullish impulse goes against the trend. Do you know the buy? Okay, I've done that. Do you put your trend line support and resistance in the body of the candles or on the wick? Just like I said earlier on, it has to be a zone, not just a line. There's no such thing as support and resistance line. Instead, support and resistance zone. Personally, I don't really trade support and resistance that much in my trading. But if I'm using it, it has to be from body to wick. These are like zone. Like I'm looking to, if I want to say, let's say for an example, I was using this are my zone, this is where I'm going to use everything. Well, if I'm just to mark up, I'll just put one line. No point in drawing all those things, because I already know what it is. So if I see rejection here, I know what I'm looking for. That makes sense. Try to use the 20 MA indication, but yeah, come on. You have to learn more. To magic too. Must you see a corrective move to support? If you send me a private message again, I won't reply. All of you send in private. Send it post public. If you ask a question private again, I'm tired of reading privately, so I won't answer all those questions. Must you see a corrective move to support resistance and seeing a corrective on the must you see a corrective move to support or resistance and seeing a rejection on the structure? Yeah, that's how I love to take my head. Yeah, yes, that's what I love. That's what I love, and that's how I like to take my trade. It must be correct. The correction must, just like I said, the correction must be a correction, and then I need rejection for my entry. So rejection are usually my last confirmation, which is the candlestick formation. Like, can you also trade reversal when price didn't move correctively, but move with impulsively to support and resistance? No, me personally, I don't take impulsive movement to support and resistance. I like to see momentum drop before I execute the trade. How do we calculate the stop loss? Stop loss, someone is asking me how do we calculate the stop loss. Let me share my screen. Here we go again. So basically, there's no such thing as a perfect place to put your stop loss, but when you get to learn the advance, you get to know where exactly we use our stop loss at structures. We use structures to determine when is our stop loss. So if you are taking a trade, you have to put your stop loss where if it hits, that means that trade is invalid, like it's a change of trend for you. So if we sold from this stop, for an example, right here, our stop loss has to be above that candle. Same as if we sold from here, our stop loss has to be above. Just like if we sold from this structure at the top, our stop loss has to be above. Do you get? So basically what I'm trying to say is that if you are in a bearish environment and you're looking to sell, your stop loss has to be above entry because you are selling. You want price to go down. So if price is going against you, that means you'll be losing. That's your stop loss. You have already set it that, oh, this is the amount I've accepted to risk in this particular trade. So when it hits, it's fine because you already accepted the risk at the first place. So why are you going to cry when you lose? So what I'm saying again is if you are buying bullish market, vice versa, stop loss has to be below. So I hope that makes sense. Okay. We buy when it's a bearish and sell when it is bullish. We buy in a bullish market, we sell in a bearish market. Bearish means sell. Bullish means buy. Okay? You want to buy in a bullish market. You want to buy a bullish market, sell bearish market. I was trying to ask you how to know a good double tops and bottom to take you on a high probability trade setup. Yeah, if it's from higher time frame is stronger, just like I say, any signal you get from higher time frame are stronger than the ones you see on lower time frame. So if you get a rejection on higher time frame, that means it's stronger than the one you see on lower time frame. It has to be a zone though. I posted something on Telegram but got no reply. What want to know maybe I get it right or not? Okay, I'll check your Telegram. I just pin the reply on the message again. I'll go and check it after this call and then I'll answer you, I promise. Please, is it a must? All of the 5 confirmation checklists must be accomplished before we enter a trade. No. Just like I say, you have to create your own rule. You see that thing you're learning, that's another person's rule. Okay? You have to create your own. I don't even use any of those things. Yeah. So those are like, they are just letting you know, like, this is how it's supposed to be. You need to see your confirmation before you execute the trade. Plus, please, can you show me GDP as this setup? Oh, yeah, I can. For now, I haven't done my markup. I usually mark up when the market is closed, but, I left the house. I just came back. And I have to run this call with you guys tonight, as promised. So that's it. This is an ascending. And then I'll be waiting to see a flag. Waiting for a bearish flag to say the person that asked for this. For our time frame is common. Why? What do you mean common? Boss, please, can you show? Okay. What I don't understand what you mean by common. Kabiru. I don't understand what you mean by 4 hour time frame is common. Based on your fall, I say stop sending me private messages. If you're asking messages, questions, send it publicly, please. Because other people are learning from your questions. So if you're making it private, it's not all about me directly. So other people can take screenshot of the questions, I swear. Thank you, guys. So based on your 4-line strategy, which price hits and rejects on the structure, support and resistance on the trap without breaking out? Can I still go short on the long? So the strategy is more like a break and retest. So price has to break. But if you want to take a trade like that, that means it has to be with the trend. Like, oh, we are trapped, just like a trap price, but you trap price in an uptrend, so you want to buy from the low. Vice versa, when you trap price in the downtrend, you want to sell from the high of the structure. Okay, so it makes sense if you know what you are doing. But personally, I love to see a break and retest if I'm using the 4-line strategy. And we have less than 3 minutes left for this call to end. So if you have any question, you want us to round it up with, or you want anything for me to round it up with for you guys, please let me know. I'm at your service, It's already 12, so you guys can sleep because I'll still be marking up tonight. I'll still have to see a movie tonight as well. I still have to read tonight before I go to bed. So I'm still up, so you guys will want to sleep. How was your day, bro? Hope you are not mad at Madrid. I'm a big time Madrid fan, if that's what you mean, big time. So when we lose, it hurts me. I don't really watch football. I only watch when Real Madrid is playing. Funny enough, I don't watch any of these matches. I only watch football when Real Madrid is playing and Champions League final. I like to watch Champions League final also. Please, can you drop the video on how to use TradingView? It's on the Telegram, Go to our Telegram, search for it. Go on, if you are on the advanced, just go to Intro to NF9, you see it. It's like part of the first topic. I think it's the number one topic on our course. I think it's number one. Either TradingView or MT4 here. So we have 2 minutes more for this call to end for you guys to sleep without hearing my voice anymore for today until next week. That's when you guys will hear my voice again. So we have 2 minutes to hear my voice. So feel free to ask any question. What's your own criteria before entering a trade? My criteria before entering a trade. I use the 20 EMA. That's what I use. So that's my last confirmation, guys. But it depends. I have a lot of strategy, just like you can see on the Telegram. I posted a lot of strategy for you guys. So it's not that I use everything. You understand? You have to pick the ones you like and stick to them. Don't just go and be using 4-line, using Fibonacci, using 20 MA. If it's 20 MA you want, pick one. I keep telling my students, find the one you like, stick to that one. Don't go and be joining everything together. Okay? So I use 20 MA, guys. When is the next webinar? That's next week, Monday, live webinar. But I'll be dropping some videos, along. So that's all. Have a good night, guys. If you have more questions, feel free to hit me up personally on my WhatsApp and I'll reply. Thank you, guys. Good night. Bye.